Good afternoon and welcome to GrainTV at September 30th, 2013. To my left is Logan and I'm Brock Schimbill. We had a slew of fundamental news across the news wires today. Sort of a fire tip to see how we ended. Corn was down 12.5 cents. Soybeans, the leader to the downside, off 37 cents here today. Wheat in Chicago down 4.5, and Kansas City showing some relative strength, up 7 3/4 cents.
Yeah, you know, the big driver today, Brock, was that September 1st grain stock report. Let's jump right into those numbers. Certainly, corn and soybeans here today both felt a lot of bearish pressure from the numbers that the USDA released today. Corn in particular, take a look here, reported 824 million bushels as of September 1st for corn stocks. You can see that was well above trade expectations. Similar story for soybeans, coming in about 17 million bushels higher than what the trade was expecting. And wheat was a completely different story. We saw a relative strength there, as you mentioned, Brock, and that was really a result of lower than expected September 1st wheat stocks by about 58 million bushels. So it's clear that right now, just looking at these September 1 grain stocks, that here over the last quarter of the marketing year, there was a lot of substitution done of wheat for corn and feed rations, and certainly with the very high prices that we had last year, there might have been more demand destroyed than what the market was really accounting for here. Certainly a big surprise there in terms of that corn number.
You know, a couple things to point out there. Soybeans, we did come in quite a bit above what analysts were expecting, and the reason why the USDA cited that was we had better than anticipated production last year. We had an increase in harvested acres. We had also had an increase in average bushels per acre. So that was kind of surprising to see this late in the marketing year to have those revisions made. And like you said, for wheat, you know, that was a little bit of a surprise to the downside as well.
Yeah.
Bigger disappearance there. Corn had less disappearance, so I think that substitution was a big factor in last summer, during last summer when we had those high corn prices. You know, as far as wheat is concerned, the big surprise out of the small grains report that we also got out today was hard red winter wheat, Kansas City wheat crop. We came in quite a bit above, or quite a bit below what the analysts were expecting for production there, and that's why I think we saw the relative strength in that wheat complex. You know, Kansas City was up about 7 3/4 here today.
Yeah, you know, Brock, looking at the action in wheat today, we did have, you know, what a lot of people would consider to be a bullish story for wheat here developing, but we weren't able to hold on to positive territory into the close for Chicago. As you mentioned, Kansas City did close positive. But for Chicago wheat, do you have concern right now for that market, given how bullish these numbers were and that we didn't really see a good close?
You know, I think we were due for a little bit of a pullback in that market. We had been rallying over the last couple of weeks. Today we did get a bullish report, but I think you know, Chicago wheat was actually drugged down late in the session, the last few minutes of the session actually. We saw corn and soybeans head quite a bit sharper to the downside,
right?
And I think wheat got pulled down by that. I'm not really concerned at this point. We were meeting some technical resistance. Like I said, we have been rallying for quite a while, so we were due for a little bit of a pullback. But I think the bullish fundamentals that we have now are really setting the stage for us to be propped up at these prices, or maybe even rally just a little bit further, maybe up to that $7 level.
Yeah, certainly, you know, a lot of expectations now for wheat to show some relative strength against corn and soybeans in light of the numbers that we got today. You know, the third report that we got today, as you said, Brock, a lot of reports out today, was the crop progress and condition report. Take a look here at what we had reported this afternoon from the USDA. We didn't have any change in that corn good to excellent rating, still 55%. Soybeans 3% better on good to excellent. The harvested percentage for soybeans isn't a big story there. That was in line with trade expectations. And people were looking for a little bit more harvested in terms of the corn number, maybe around 15%. The USDA reported today just 12% of U.S. corn is harvested. But I think certainly for the corn market right now, that September 1st grain stock number is really going to trump any concerns about harvest at this point. You know, it really seems like that this the quality of this crop is stabilizing here in the last several weeks, and there's not a lot of sources for bullish information to come out. Certainly the October WASDE report could provide a surprise to the market in terms of production, but I really think we're going to have to wait here into the winter to get another good bullish story. That could come by South American production concerns, or that could come by serious demand returning to the U.S. market. We've seen it a little bit for wheat here in the last couple weeks, but not really for corn and soybeans. We'll have to see what the next couple weeks bring, though, following this report. Thanks a lot for joining us here on GrainTV for a big report Monday. We'll see you tomorrow.